As of the close of regular trading on Friday, August 7, 2026, Space Exploration Technologies Corp., trading on the NASDAQ under the ticker SPCX, sits at a price of $133.11 per share. Because the stock market is currently closed for the weekend, that figure reflects the final session closing price heading into the weekend. While mainstream financial media continues to cover SPCX through the familiar lens of satellite broadband expansion and commercial rocket launches, the real market dynamic unfolding beneath the surface is vastly different. What most retail investors trading on a Fidelity mobile app or checking their Robinhood stock trading dashboard see is a high-profile aerospace titan. What institutional order flows are actually pricing in is an entirely restructured technology conglomerate where orbital logistics, global satellite connectivity, and massive artificial intelligence infrastructure are collapsing into a single vertically integrated platform. The standard market narrative suggests that Space Exploration Technologies Corp. is primarily valued on its launch manifest frequency and Starlink subscriber growth. That common belief is precisely why so many casual market participants treat SPCX like a typical aerospace or defense contractor. But that assumption misses the mark entirely. If you look closely at recent institutional positioning across major interactive brokers' trading accounts and professional wealth desks, the current market valuation reflects a fundamental repricing of capital efficiency. Investors who treat this as just another aerospace ticker are measuring the company against an outdated playbook, while smart capital is evaluating its ability to internalize compute, communications, and orbital infrastructure under one balance sheet. When you examine the recent price action, SPCX has demonstrated distinct volatility patterns during high-volume sessions. Trading volume spiked significantly over recent weeks as institutional investors adjusted their core allocations across major brokerage platforms. Unlike standard mega-cap tech equities like Apple stock, Tesla stock, or Nvidia stock, where price swings are often dictated by consumer hardware demand or immediate graphics card cycles, SPCX moves on complex macro triggers. Institutional desks using interactive brokers' platform tools have noted heavy accumulation during dip periods, suggesting that large fund managers view near-term price pullbacks as strategic entry points rather than structural breakdowns. The underlying order flow shows clear evidence that institutional capital is accumulating shares quietly, while retail trading activity remains divided over near-term margin targets. Recent earnings figures and operational updates have triggered intense debate across financial forums and active investor communities. Macroeconomic headwinds, including fluctuating global interest rates and elevated capital expenditure requirements, have put pressure on tech valuations broad scale. Yet sector momentum across aerospace and telecommunications has allowed SPCX to decouple from weaker peers. While traditional telecom infrastructure operators struggle with high debt loads and slow expansion, the connectivity side of Space Exploration Technologies Corp. Continues to scale capital deployment with significantly higher operational leverage. Earnings reactions over past quarters highlighted a widening gap between top-line revenue acceleration and short-term capital expenditure outlays. Wall Street analysts who focused strictly on short-term operating income expressed caution, whereas long-horizon funds executing trades via Fidelity Wealth Management or SoFi Active Investing recognized that heavy upfront capital spend is creating an unassailable competitive moat. Comment below how many shares of Space Exploration Technologies Corp. Or SPCX you currently hold in your individual brokerage account, or if you are waiting for a pullback before adding it to your portfolio. To fully grasp why this tension between market expectations and structural reality exists, it helps to review how the core business model actually operates. Space Exploration Technologies Corp. Functions through three distinct yet tightly interconnected operational divisions: space, connectivity, and artificial intelligence. The space segment designs, manufactures, and launches reusable orbital rockets, providing routine launch services for commercial satellite operators, civil space programs, and national defense agencies. The connectivity segment manages the Starlink satellite constellation in low Earth orbit, delivering high-speed internet to consumer, enterprise, maritime, and aviation customers across the globe. Meanwhile, the artificial intelligence segment operates computational infrastructure, advanced models, and digital data ecosystems that feed directly into the broader network. Historically, commercial launch operations were treated as a low-margin, capital-intensive venture with severe execution risk. Older industry reports and past performance metrics from traditional defense vendors reflected low launch cadences and exorbitant per-mission costs. Space Exploration Technologies Corp flipped that framework completely by mastering stage reusability, sharply lowering the cost per kilogram to orbit. By leveraging internal launch capabilities to deploy its own global satellite constellation, the company converted what used to be a massive cost center into a proprietary engine for global broadband revenue. That operational synergy is something traditional defense or telecom companies simply cannot duplicate without incurring massive external vendor expenses. Looking ahead, the forward outlook for SPCX hinges on several distinct catalysts and structural risks that every serious investor must evaluate. On the catalyst side, the ongoing development and operational scaling of next-generation heavy-lift launch architectures stand out as the primary growth vector. Expanding payload capacity to orbit drastically improves unit economics for deploying larger, more capable direct-to-cell satellites and orbital data centers. Furthermore, deeper integration between satellite connectivity and direct consumer devices creates a massive addressable market that reaches far beyond rural broadband users. For investors managing self-investing strategies across platforms like Robinhood app, SoFi ETFs, or Schwab Intelligent Portfolios, these catalysts represent long-term enterprise value drivers that go beyond daily stock price fluctuations. However, significant risks remain on the horizon. Regulatory oversight surrounding orbital debris, radio spectrum allocation, and global telecom licensing presents constant operational friction. Furthermore, the immense capital required to build out planetary-scale compute infrastructure means that any unexpected delay in launch schedules or payload deployment directly impacts capital returns. Macroeconomic pressures, such as sustained elevated capital costs or supply chain bottlenecks for specialized aerospace components, could temper short-term margin expansion. If market expectations demand immediate profitability without accounting for multi-billion-dollar reinvestment cycles, the stock could experience periods of severe repricing. For investors utilizing online investment portals, Fidelity IRAs, SoFi ETFs, or Robinhood cash management accounts to build long-term wealth, navigating SPCX requires separating transient sentiment from structural execution. The popular expectation viewing Space Exploration Technologies Corp as a simple rocket launch firm ignores the sheer scale of its vertical integration. The reality is that SPCX is building an integrated industrial ecosystem that spans orbital transport, global telecommunications, and high-performance compute infrastructure. Those who understand this contrast between surface sentiment and underlying balance sheet strength are far better positioned to evaluate where this company sits within the broader technology landscape. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.